Was today a huge manipulation of Bitcoin and cryptocurrencies with the fake ETF announcement from a hacked SEC Twitter account. Let's uncover what's going on in the markets, looking specifically at the charts and the data. Don't go anywhere, hit that like and subscribe button. It's your home of macro cycle analysis. Just when we think we've seen it all in cryptocurrencies, now we have a fake ETF announcement from the SEC. Bitcoin jumped past 46, getting very close to $48,000 before quickly dropping back down to $45,000. Now, there is no clear sign as to what is happening next. Maybe by the time you've watched this, you've got the answer. But for now, there is still the possibility of an ETF being approved within the next 12 to 24 hours. So that leaves us sitting at roughly 45,900. Now I've got the Wyckoff schematic to get through with you guys today, looking at the different phases of the schematic, which hopefully gives us a few more clues as to what's going on in these markets. Because last time we watched it, we were back on the 2nd of January, looking at how this market could potentially be going through some sort of distribution. Since that point, we've seen the market go sideways and then a quick pump and dump, and now we sit above those previous levels. So could the distribution not be taking place? And this is accumulation in the hopes of Bitcoin going up to $200,000 or whatever crazy target they're telling us about. Let's continue to follow up with that story now. Let's take a look at the S&P 500. We've seen a nice bounce back over the last couple of days, with yesterday just giving us a little push to the downside and a quick recovery. So the main thing I want to look at for the S&P is that risk coming back into the market. We just want to make sure of that day after day, just looking at the data to ensure that this cycle is still on track, because there is no shortage of the bearish news. Now, I'm still seeing recession calls based on jobs data, based on the possibility of interest rates coming back, based on the possibility of, you name it, some sort of extra debt that the public is taking on. Whatever it is, they're coming at us with more recession talks. So the main thing we're going to look at before we get into Bitcoin and the Wyckoff schematic is the S&P 500 and some of the data from that. Now, the data today, we're looking at S&P 500 after dumb money confidence cycles from greater than or equal to 80% down to or less than equal to 70%. So basically a quick movement here from the dumb money confidence, because, well, we've seen a lot of confidence coming in from the dumb money. That's the terminology here that the industry uses. Don't come at me. So in terms of this, there is your 80% on the confidence, and now it's cycled back down to 70%. What the data is saying is that the sentiment precedes some short-term declines, but potentially it can show us a longer-term bullishness to the market. Now, we have 24 signals here, and you can see that none of these signals happened within the bear markets. Basically, those bear markets that lasted 6 months or more. Last 2022's bear market was roughly 10 months. So the signals have basically all come in the bull markets, which is a nice positive to see for this particular data. Now, what happens 12 months later is very, very positive. 90% after 12 months, 90% of the time after 12 months, the market is positive and it's up. The only time it didn't happen was 2007. You saw two signals here, one very substantial at 34% drawdown. That was basically right at the end at that double top, which some would argue is basically right about now. So in 12 months time, 1 out of 10 times, this market has been negative. And in 2 of these cases, we've seen it negative, but 9 out of 10 times it is positive. But within those cases, one of those times was very, very substantial. And that was a 34% drawdown from that particular point. And that was into the GFC. Is it going to happen again? Well, looking at the probabilities is that it won't. 9 out of 10 times, remember, of course, there are no guarantees. There could be that one chance. But of course, I'm going to put the probabilities on my side of the ledger, and I would say that I think we've got further upside to go before we get to the big collapse that the markets will eventually call correct. Now, the next piece of data is another piece of sentiment. Sentiment is cycled from panic to not, 60 down to -60. When this happens, typically you see another positive result. So essentially what I'm looking at here is the sentiment of the market. For the traditional markets, there's been a lot of hype, and now we're seeing that pull back, and we're seeing it pull back at those peaks of the market here. So we're up at those previous old all-time high levels. We're within 1% of the new all-time high as well. So in the short term, it still looks okay. 1 week to 2 weeks, it could be all right. Right now, we're just trading within a range up here. But don't forget, after 12 months, it can look pretty good. Average max gain has been 22%, 8 out of 10 times, with the median being roughly 15%. And the average max loss is about 3%. So that's for the S&P. Now, to another signal here, just looking at the breadth of the market, essentially just looking at all of those stocks. When we see the breadth, SPY breadth being above the 50-day average, so 90%, including overlaps, indicator crossed above the 90%, 98% of the time, the market has been positive. So these are still all leading to the next 12 months being positive, but in the short term, it might not be as rosy as we have been seeing over the last few months in the stock market. These last few months were massive. So it doesn't mean that the massive great gains are going to continue in the short term. That's sort of 1, 2, 3 months when we're looking at the broader picture. But over that longer period throughout 2024, probably towards the end of 2024, we should be seeing that the market will close higher than it opened, just based on the data that we're looking at here. Now, let's find out what's going on with the Wyckoff schematic and basically what the charts are showing in relation to this latest news from Gary Gensler and the SEC. The Twitter account was compromised and an unauthorized tweet was posted. The SEC has not approved the listing and trading of a spot Bitcoin ETF product. So we've seen a huge spike up, a huge dump down, pretty significant volume on both ends. The market is still within this particular trading range. However, it keeps putting in those higher highs. Trade with the trend if you are a trader, and congratulations to TIA premium traders who are crushing their wins again. You guys are hopefully staying safe out there in the markets, making your gains, keeping your stops in order, and keeping your head in check, especially around these significant times when the volatility increases. And so if you want to learn more about this, check out the link in the top of the video description for TIA Premium and jump on board with the free TIA report. Links are all down there and also on the homepage of the YouTube channel. So going back to where we sit with the Wyckoff schematic and the announcement so far, when we looked at the first Wyckoff video, just going back now 6 days, so looking at this, or 7 days, sorry, we're looking at the possibility of the distribution here coming up for BTC. Now, here is your update from that video, and that video was roughly here. The following day, the market collapsed to that point there. But we hadn't taken out the trading range lows just yet. We did test on the previous trading range lows, but it didn't get back past that. So we're still within that stage of phase B. At the time, we were looking at this. So the up thrust UT and UTAD, so the up thrust after distribution test. And I was looking at this as being a potential last point of supply. Did that come in? Obviously not. We've now pushed up a little higher. So this could potentially move out a little further. Same sort of deal here, sign of weakness. It is essentially the start of a sign of weakness, but I think we're going to be looking at another one of these in the future. Now, of course, I've always maintained that I could be completely incorrect on this, and this could potentially be a reaccumulation for higher prices. But until I get the confirmation of that, and what I would want to see for confirmation is that the market consolidates above the previous trading tops and then again above the next trading tops, that would be the signal that we would be looking at this all have been one big reaccumulation before the market pumps up again. Now, in terms of the shorter term time frame, looking at where we are here, we're looking at the 4-hour chart for the Wyckoff schematic. You can see on this particular distribution schematic, number one, remember, none of these have to be exactly the same. If we try to curve fit anything exactly the same, that's when problems can arise. But I'm just using this as an overall guide. Now, it seems like it's roughly the same as this, so let's call it similar. You've got the buying climax right here. We've also got the upthrust. You've also got the upthrust after distribution, and then the upthrust after distribution. Now, just checking out the ST, so that's the secondary test. For this particular chart on the bit stamp, this was slightly higher. But if we check it out on Coinbase, it was slightly lower. So pay attention to those on which particular chart you're looking at. So we're not going to get too up in arms about the nuanced signals on that, or the nuanced bar patterns, because as you could see from Coinbase, which has got more volume than the Bitstamp chart, well, it was slightly lower. So if this is to continue to play out similar to what's on this schematic, what we would want to see over the next several days is the market come back into the trading range. So that trading range sits at roughly $46,000, currently sitting on 46,001. And down at the bottom end here, somewhere around that sort of $40,000. So somewhere between $40,000 and $46,000 is the trading range. And that's what you would want to see if this is in fact going to be a distribution schematic playing out for BTC at these $40,000 levels. You'd want to see it come back into $40,000 to $46,000. We're looking at this as a potential phase C. We haven't necessarily moved into the next phase just yet. So phase C. In distribution, phase C may reveal itself via an upthrust or an upthrust after distribution. So what do we have? Well, we've got an upthrust, we've got another upthrust, we've got an upthrust after distribution. And as I said, I'm not trying to say that this is 100% correct. I'm basically just reading the market as we go. Now, I could do this in hindsight and show you exactly how it all played out, but what's the use of that? I don't know what's going to happen on this black side of the chart. I'm not the manipulator of the market. I'm just reading the schematics here, checking it out on how it plays out and what's happened in the past, and seeing if we can apply it to our best ability in the market at the current time. So hopefully it can help us in our own trading and investing. Because as I said, what's the point of being able to do this after the fact? It doesn't really help anyone if you're talking about it after the fact. What's interesting is trying to do it throughout the period of a potential schematic coming together. We did the same thing through the lows of the market. We were looking at this on the channel back at the lows from late 2022, early 2023, and the market basically broke out from that point. You can go back and check out those videos on the channel. So let's see if we can put something else together right now for Bitcoin on this shorter term time frame for a potential local top, not a cycle top altogether. Okay, so with that in mind, we are roughly at that 46K level. With that in mind, back to phase C and how it typically unfolds. As noted above, a upthrust or an upthrust is the opposite of spring. So that's what we're looking at for the bottom in the market, where we saw the spring when FTX collapsed in November of 2022. That was the spring of the market, the worst possible feeling that everyone had. It was the start, and we had the summer to come. So opposite of spring. It is a price move above the trading range resistance that quickly reverses and closes in the trading range. Okay, so we saw that on an upthrust, but like it says here, we're looking at an upthrust or an upthrust after distribution. So what that means is maybe this is the distribution, maybe this is the upthrust after the distribution, which essentially becomes more distribution, and the market potentially closes back under. And what we need to see now over the coming days, the price move above the trading range, which it did, and then quickly reverse and close in the trading range. This is a test of the remaining demand. We've seen absolute mayhem at the top of the market with all of these ETF announcements, fake announcements, and the ETF hype. It has been ridiculous. We had market insiders yesterday calling for $200,000 Bitcoin at the end of this year or next year. Whatever it is, they're just trying to put the biggest headlines out there. Everything massive to grab the most amount of attention right now while all of the attention is here. But what is the price chart doing? Well, it's basically done from that point of the move, about 7%, and we're currently sitting at 4.5%. So if you've got the biggest news in Bitcoin's history, unprecedented, it's going to be $500,000 BTC, it's going to be $1 million BTC, and the price does 4.5% in the last 24 hours. Do you think that that is what it's going to take in order to push this market even higher? Do you think that's the extent of the excitement? Do you think that that is the extent of the demand to push the price up? Or do you think we're just waiting now for the actual ETF announcement and then we start to push the price even higher? I'm going to leave that one in your court. That ball is in your court. I'll leave it in the pinned comment down below. What do you think is happening? Do you think this amount of excitement is warranted for that type of price action. This is a test of the remaining demand. It is also a bull trap. It appears to signal the resumption of the uptrend, but in reality is intended to wrong foot uninformed breakout traders. An upthrust or upthrust after distribution allows large interest to mislead the public about the future trend direction and subsequently sell additional shares at elevated prices to such breakout traders and investors before the markdown begins. Like I said, I don't know what the answer is to this. This sounds similar to what I think is happening. Of course, I can be completely wrong, but I'm just reading this and it sounds like what's happening, especially when I look at what's going on in the media here. You've got your Cathie Wood coming out because that's her ETF that is at the deadline now. Cathie Wood with ARK Invest and 21 Shares 21. All she does is act like a moon girl and just talk stupid big headlines that don't come true. That's what Cathie does. Cathie Wood is essentially like a crypto moon boy on YouTube. Phase C. In addition, a upthrust after distribution may induce smaller traders in short positions to cover and surrender their shares to the larger interests who have engineered this move. Engineered, another word for manipulation. So if that's the case, well, where does phase D sit us? Phase D arrives after the tests in phase C show us the last gasps of demand. During phase D, price travels to or through trading range support. So that means phase D needs to come back down and break down from this support at $40,000. Is that going to be the case? We shall wait and see. I obviously don't have that answer. Maybe the market even just pulls back from here and remains in this trading range until the halving or until some time frame out in the future. I honestly don't know what that answer is going to be, but of course, at least we have what the market has already given us, and that is this trading range roughly around that sort of 45, 46K down to about that $40,000. Now, should it break down from that, well, that would then signal your distribution schematic has played out, and you'll probably be heading back down into the next zone to test some of these levels around your 34 up to roughly $38,000, which was where that previous trading range was before we broke out into the next one. Whatever happens, I'm super excited about this because I can see something playing out right in front of our eyes. And to me, it's just a massive learning. So hopefully you're learning from this as well. If you are, hit the like and subscribe. Let's have a look at what's going on in the total cryptocurrency market caps. Now, this one includes Bitcoin and ETH. This still seems like we're breaking out of the accumulation zone and potentially into this phase D, and then eventually I think we'll head up into that phase E. So as a brief recap for the total cryptocurrency market cap, everything out there, it looks like we are into that phase D, or well and truly into that now, with many weeks above the previous trading range. So I suspect this is phase D for the rest of the cryptocurrency space. Probably not a big call for most now, but remember at the time when we were looking at the market around $1 trillion, it was still questionable when most were expecting a bigger collapse. Now, if we do get the pullback here and we start to come back to around 1.26 or $1.28 trillion, you might hear from some of those bears saying that they called the top and that they are shorting the hell out of the market now, and we're all going to get new lows. But keep an eye on where these previous resistance levels are. 1.16, 1.18, somewhere around this top here, 1.26. And if the market basically comes back to those levels, finds support, well then that's probably going to be a pretty decent signal to be loading up before the next move to the upside. And this goes hand in hand with yesterday's video, where we're looking at the possibility of there being one final crash before Bitcoin breaks to a new all-time high. That could be the one final crash into that zone. So that's the total cryptocurrency market cap. Now, this is your total cryptocurrency market cap, excluding Bitcoin, excluding ETH, and excluding stablecoins, using the TI again total cryptocurrency market cap at the top here. So it's our custom indicator to be able to remove those market caps. Also, for this market cap, it looks like we are into that phase D. Now I've got question marks because this is something that we've been following for many months now. Looking back to any particular support areas, somewhere around that sort of 270, 280 billion would be a reasonable pullback for the market. And really, I would have expected it would do more, but just looking at the support and resistance levels, it's 32%. I would think some of the altcoins are probably going to do a lot more than that, considering even Solana has pulled back 32% already from that current top of $127. So I suspect many of them will do more than that 30%, but if you're just watching the overall market caps, then keep your eyes glued to this one here, your total cryptocurrency market cap, TIA, which excludes the stable coins as well. If you don't have it, then just check out total 3 and just watch for the pullback to those previous levels here, roughly about 400 or so billion. Now, if you want to get started with trading cryptos before the bull market mania goes absolutely ballistic, check out the links in the video description for TIA Crypto. There's a free report over there, plus how you can start to trade cryptos and do some pretty great things like a lot of the traders here are doing as well. Now it's over to you. What do you think's happening now? Are we in the distribution, or are we in a reaccumulation before this market pumps up even higher? 50, 52K, 60, maybe even $70,000. What are we in? Accumulation or distribution? It's going to take some time. Remember, we're doing this in real time. We're doing it in real time, which means that there might not be an answer for several days. Let me know in the comment section down below. Otherwise, like and subscribe. See you at the next one. Till then, take care and peace out.